Welcome back to the channel, Crypto Trend Trader, with a quick market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so we're going to get started here with Bitcoin. I am currently on the Bitstamp chart. Before we do get started though, I'd like to remind you to like and subscribe for daily market updates. And if you have any particular assets or asset classes or questions or anything like that you'd like me to discuss, feel free to leave that in the comments and I'll get to those as soon as possible. So we'll get started here with Bitcoin, and then we're going to take a look today at XRP and once again also take a look at silver as well. So here we have our Bitcoin chart. I'm on the 1 hour, and you'll see that essentially what we're looking to happen is let's take a look at the moving averages first here. Basically, we have our moving average, the 8 in red here and 21 in yellow. We got that massive move up here and came back down, retested the 21 moving average. Unfortunately, after we broke down through the red 8 here, we've been unable to get back above the 8 moving average right there. So we've been finding support consistently on the 21, and if that continues to happen long enough, we should be able to get back above it. But more likely than not, if we cannot get back above it, which we've not been able to for these last 5 candles in a row, we would expect to come down to the next relevant moving averages, which once again is going to be the 50 in bright green or 55 in darker green, which coincidentally they both fall into line at the 27,139 range. And then the next relevant moving average is going to be the 89. The 89 has, well, first let's look at the 50-55 with support right here. The 55 support, we broke down from that and found it on the 50, and then we broke down below the 50, and then we got that move back up. We did find the 55 as resistance right here, but we were able to break back through it. So now if we come down here, we would expect it to be as support, and then again, if we come back down, the next one, the relevant one that saved it, was our 89 here in purple. It saved price action right here with 4 wicks in a row, and then we got to move back up, found that resistance, and then again saved it twice in a row, and then we got that burst out to the upside. So once again, if we came down to that, that would be that 26,765 range, and then alternatively, if we came down to the 200 exponential moving average, that would line up once again with the 1, 2, 3 wick bottoms that we've gotten right here, and the potential for essentially like a flat bottom support. And then that would line up probably somewhere close to the 25,800 range, depending when we came down to that. But again, we're going to stay bullish on this market as long as price action is telling us to. And once again, we're consistently making, in this case, a higher high on the close and also higher highs on the wick. So there's no reason to get bearish on the situation. And until we see something different in the market and the market starts giving us clues, we're going to continue to trade with the trend. And that's the most important thing. So as far as trading with the trend, we'll continue to buy support, and in this case we're looking at moving averages and flat bottom supports, and that is going to be buying opportunity rather than selling opportunity. Now here on the TJD TD MACD, we do have multiple green histograms, the blue slope, but now we're starting to sell off and put in those red histograms. But what that's going to tell us is that if we stay down below, we'll get down the histogram to the slope line, typically find a bounce initially, something like this, and then we'll look for divergences. So here essentially what happened was we put in that high right here, and you'll see we have a large high slope on the histogram, and here we put in a higher high on price action, but we have a lower high on the slope histogram. So that is considered bearish divergence between these 2 points, because we have a higher high on price action for the second one, but we have a lower high on the histogram for the second one. And then if we look down here at the Stoch slope as well, you'll see we've exited the bullish control zone on the short time frame. We got the hard sell signal, and now obviously right after that we got the big sell off. So we're paying attention to that as well and see what happens with that. And it's the same type of situation. If that continues to sell off, what we're paying attention for is, are we going through a accumulation phase right here, like where the oscillator resets and then we get a move to the upside, or are we going to start entering into a downtrend when we get this 821 cross? So what we're looking for is, do the moving averages kind of bounce around like this when they get close to each other, or do we get a distinct cross to the upside where the red starts to gap away from the yellow? And that can happen as well to the downside if we do get a bearish cross. So once again, we're paying attention to that on the shorter time frames and see what the market tells us. But if we look right here, we got the same high right here on our Stoch slope as right here, same level, but Price action obviously is much higher right here. So once again, that's a bearish divergence on the shorter time frames. So we look for those to tell us what's potentially going to happen on the longer time frames. And here you'll see the RSI cross down below the EMA of the RSI in yellow, signaling obviously that we're potentially entering a, consolidation or flipping the market over bearish. So let's look at a little longer of a time frame and see what that's telling us. So we came down here, basically found support on the yellow 21, never got a close below it, never put the 8 and 21 in risk of crossing, so there's no reason to get bearish on these markets at all. Just like we discussed, we are now coming back up here, and look, we're looking for the exact same thing again. Is this histogram going to find support, which happens very often? We'll come down here and find support on the moving average, on the slope line here, and then we'll get that bounce. Are we going to now bounce to the upside and continue on the oscillator indicators the same way that we did on price action? So here we got our high close at 27,600, and here the most recent high close was at 28,367, and now here you'll see the histogram is higher right here in line with this, but here the histogram is lower. So if this just starts to roll back over and we confirm a high and start to sell off, that's going to be once again a bearish sign. That's going to be bearish divergence on the histogram right here in relation to the price action right here. So all we're looking for is the histogram lining up with price action, or are we using less energy to make the move or more energy to make the move than the price action is like corresponding with, signaling to us that that's unsustainable over time. So we can usually get like a big move up here and take very little energy to do it, but that type of thing is not sustainable in time. You would expect price action and the oscillator indicators to line up. And then once again, same thing. We got our topping out point right here, hard sell, left the bullish control zone, came down here, basically like accumulation or, bullish reset of our indicator oscillator, and then we got the flip back over to blue, indicating that we're entering a strong trend back to the upside, which once again we did on the Stoch slope. And now look, are we going to top out right here and sell back off and lose these moving averages and then flip the slope back over red and put in a lower high on the Stoch slope than we are on the price action, as where we obviously have a higher high on price action, the second high, but we have a lower high potentially. And again, we're just looking for this to tell us what's potentially going to happen in time. Are we going to get a sell-off, or are we going to flip the trend over or top out the pattern? So bearish divergence is one of the best indicators to tell you when the trend is changing over. But again, you don't want to try to pick the tops and bottoms because that's the hardest thing to do in technical analysis. You want to use the moving averages and trade with the trend. And I'd like to remind you that in the description of this video, you can find all these oscillator indicators for free on TradingView as well. And if you haven't liked and subscribed already, I highly recommend that you do for daily market updates. Now we're just going to flip over one more time and take a look at the chart from yesterday's video. We had talked about this triangle and how depending on what time frame you look at it at, and if we got a check back down here and a close on this blue line here, it was going to start looking like a descending triangle. But as long as we were closing above this green line here, it was looking to me like a flag. And now while the bias on a descending triangle would be a break to the downside, the bias on the current price action and also a flag is going to be the upside. So we got our measured move here in blue, or green if you want to be like all the way from the body right here would be the green measured move, and the majority of the move, which I'll take the first touch on the bottom and then the first touch like to the top from that same area, and that's what I'll use for the triangle measure move to the upside. You could also use the flagpole. There's lots of different ways to do it. It's just about, do you want to be more conservative or more aggressive with your measured moves? I always prefer to be more conservative. I would rather get the chunk of the move than get stuck in a trade that was profitable without taking profits on it. So here you'll see we got the measured move. We actually got the measured move and then some completely from that. So once again, we were talking about there was a 34% chance that we'd break out to the upside. As soon as we got the break here, you'll see we got a wick above, wick above, wick above, wick above, but never a close and then continuation. So as soon as we got a clear candle close above that trend line, that was considered to be a breakout, and then we chose to buy the retest. So as soon as this comes down here and retest, you buy off of this candle right here, and then after that we get our measured move to the upside. Take profits obviously at a key level, which in this case you could use the measured move, or you could use the previous all-time high. And again, you don't need to capture the entire measured move, but if you took, let's say you did like I did and took the buy from this area right here, and then took profits at the high, once again that's going to be a 5% move to the upside without leverage. So if you're using a 3 or 5x leverage, which is fairly conservative, you're looking at a 15 to 25% profit on your position. So obviously very profitable position, at which point in time when you hit that resistance you can choose to take profit on 33%, 50%, 100%, but you often want to let at least part of your position ride, and then typically you'll put your stop loss in place, or I will put my stop loss in place based on once we take out a previous candle close low. So once we hit that measured move target to the upside, if we come back down and take out this candle's low right here, you would get stopped out of the position, and then you could re-enter at either a lower price or wait for price action to play out and tell you what the next move is going to be. So, and again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Let's take a look at XRP. We had specifically spoken about this chart right here and what to expect on XRP. Oh, I'm sorry, that's here's XRP rather. We had specifically spoke about this. What we were saying is we couldn't close above the 21 and get this cross back to the upside. So as long as we're below the 200 moving average, which essentially happened way back here, we would get bearish on price action until we were closing back above it, and until we flip the slope on the 200 exponential or 200 simple moving average back to the upside. So even if we get back above the moving average itself, but it's still angled to the downside, we're not going to necessarily get bullish on the situation until we start to curve this back to the upside, and then once again confirm that we are in fact in a bull trend, bull market, or uptrend, depending on how you want to say it. But essentially what happened here, we got the exact move down here to the support. I believe in the video I said 17.27 cents or 17.27, and the absolute low was 1771 on this candle and 1726 on this one. So we basically nailed this perfectly. I said 1727 and we got down to 1726. So I was basically like 1/1000th of a penny off. So very close, obviously, or 1/100th of a penny off. Very close, obviously. You don't need to be perfect in these markets to make money. So, and you'll notice that as soon as we took the buy off of this area for a short-term scalp, depending when you got in, which was obviously in this case we took the candle close off of the red candle here, and then depending when you sold, you were looking at a 41% move without leverage. I took profits on the majority of my position at the 8 EMA, so that is a 27% move without leverage. So once again, if you're using like a 3 or 5x leverage, you're basically looking at somewhere from a 75 to over 120% move profit. So and then once again, take profits on part of your position here, and then if we take out previous candle low, so once this one comes down here, gets bought back up aggressively, we cannot close above the 8, start thinking about getting out of the position, and then obviously, once the sell-off happens and we take out the close from the previous candle, you should be out of your position, But again, it's not financial advice. It's up to you how to do it. I'm just explaining to you how I take profits. What was I looking for right here for where this would potentially top out? I was looking for the parabolic SAR, red dots right here. I was looking for the 8 moving average or 21 moving average, and I was looking for the previous support area flipped as resistance. So the previous support was 25 cents, basically 25.9 cents. Don't expect it to be overly aggressive, but essentially what we're looking for is a similar move to this. We get that rollover waterfall, we get an aggressive wick to the upside, flat bottom support, and then a push back up to the 21. In this case, we sold off, found support at our horizontal support that we had called out ahead of time, got the push back up, take profits on the majority of our position at the 8 EMA, and then once again, at the 21. I like to front run the moving averages slightly, or parabolic SAR, or resistance or support, just to make sure that I get into or out of my position before the majority of the market does, just in case someone else, which obviously the entire purpose of my TA is to do what other people are doing just slightly before they do it. So in this case, we take profits prior to hitting the exact moving averages or prior to hitting the exact support or resistance. That way we make sure that we do get in the position and out of the position with our profits secured. Because the last thing you want to do is have this massive move up here, not take profits, and then it sells back off, and you basically lose out on this whole wick right here. But any kind of profits are not real until they're realized. So I like to always take profits along the way. I like to break up my positions based on a predetermined take profit level, whether it's 33%, 50%, 25%, whatever you decide is absolutely fine, as long as you're making sure that you are realizing these profits. That's the most important thing. So at this point in time, what we're paying attention to is, can we take out this red parabolic SAR to the upside, get a move back up to the 21, which would put us at about 24 cents, or potentially back up to this like key resistance levels here, or moving averages as well. But I am currently out of the trade in XRP, waiting to see how that price action responds. And again, if we start to close above the 8 and 21 and then potentially start crossing this to the upside, I may take another scalp to the upside, back up to retest like the 377, 528, and 200s, all here at about 41 cents. But again, as long as we are underneath the long-term moving averages in blue and white and gray right here, and as long as we are consolidating below our short-term moving averages, this looks extremely bearish to me. And then obviously, like, fundamentals considered as well, extremely bearish also. So let's switch over to silver and take a look at that. Silver is a very complicated chart right now, and what we have going on here, basically on the daily right now, and this is our CFDs on silver. But basically, what we're looking at is multiple things on silver. Looking at the premiums to buy spot right now, which the premiums are, I would say, overall average for like the last year or so. We've seen them as high as $3 and $4 an ounce, depending. We've seen them as low as in the past couple years as less than $1 per ounce. Typically, depending on what you're looking for and what silver you're sourcing, right now from spot silver, you're typically looking at anywhere from like $1.25 to $3, depending on the volume and what you're looking for as well, just for like your regular weighted silver. But essentially what we had here is we came down, found support, came down, found support, came down, found support, and exactly like what Bitcoin did, but before it did it on the daily, it looked like we were putting in an ascending triangle, but we had this angled support coming down here, depending on what time frame you're looking at. And as soon as we broke out to the upside, got the close here, and then started to get continuation, we expect once again to get our measured move to the upside. The measured move being from the top point to the bottom point, or the majority of the pattern on the conservative side. So at this point in time, we've gotten our push up so far, but we're expecting quite a bit of continuation. Our first main target off of the measure move is going to be close to $29 up here. Also going to be in line with the 886 of the top right here to the bottom right here. So that 886 is 88.6% retracement of the sell-off. So we got a bearish sell-off. We would get a bullish bounce back up, but put in a lower high. So we would fail to take out this high and continue on in the uptrend. But obviously, like, silver looks very bullish right now on a long-term trend. So it's very likely that we would break out to a new high, similar to what Bitcoin just did. But if we do not, we want to obviously make sure that we take profits along the way. Now, we also have quite a few other Fibonacci's in place here as well. We have from the bottom of the move right here all the way up to the top in blue, and then we sold off and made it down nearly to the 382, and then got a bullish retracement off of that, a bounce off of that after a double bottom here. The double bottom measure move is going to go from the neckline and the bottom of the pattern. So from the bottom of the pattern to the neckline, from the breakout of the neckline, once again, it's going to line up exactly with our double top right here as well. And then we also have quite a few other Fibonacci's in place also. We have from the previous move. So our previous, once we took out this high right here, we were less concerned at it. But we have the red top right here to the red bottom right here. So that was the top before we put in that macro low with the sell-off in March. And then we're going to look at the Fibonacci extensions. So back to the high from that is going to be at that $20 range basically. And then the first Fibonacci extension was the 1.382, the 1.5, the 1.618, and then we took all those out and came back down. So then we're going to go back to our previous swing that was relevant, which that's going to be our swing previously from 2016 in July, and that is going to be that $21 range where we topped out and then continued to consolidate and broke down from that descending triangle before we got the attempted pushback up, put in a lower high, and then got the sell-off. So now from this high all the way down to the bottom right here, that's going to be like the next macro or micro, depending on how you look at it, move here. So now the extensions, Fibonacci extensions from that are going to be in yellow. So the yellow fib extension top would have been back to $21.25, the 1.26, the 1.382, and then we topped out right here in between the 1.5 and the 1.618. So that was already a target that we were paying attention to. When we came down to the retest, we came down and found support just above the 1. So we essentially came back down and we've got resistance, support, resistance, and then when we came back down we found support slightly higher than the previous resistance. So that's what we had here. We double bottomed above the previous resistance and then got our move back up here. So now we're paying attention. Are we going to be able to make it up this time to the 1.618 Fibonacci extension, which is going to be $30.70, and take out this high, or are we going to fall short again at the 1.382, which is where we're at now, or the 1.5? So once again we're paying attention to that. And then if we continue to zoom out here as well, we can go back slightly further and we'll notice that the next relevant Fibonacci that we're using is going to be the all-time high previously, which, let me switch over to a longer time frame. The chart's going to start getting pretty muddled here, obviously, but the next previous high, or the next Fibonacci that's relevant we're going to look at is that all-time high at like $50. So we had previously, this is what you really need to pay attention to in silver that makes it different from gold and a lot of these other things. We had a previous all-time high of like $46 back in 1979, 1980 range, okay? And then we came back up, we took out the high slightly back here in 2011, but that was basically a double top. Within a couple dollars. So we took that out and put in a new all-time high at $50, and then we came back in and we had put in a low, a higher low, a higher high, a higher low, a lower low, but this ends up being one single move. So really the relevance is not this low right here or this low right here. The relevance is the high here to the all-time low to the new high, to the all-time low to the potentially new high. So we could actually come all the way back down here and put in another low, take out this low, and then go to all-time highs, or we could get the continuation now and triple top, or we could get the continuation to the upside, which is what I think is going to happen on the macro. But most importantly, you'll notice from the all-time low back here to the all-time high right here, we sold back off, and then we pay attention to where that got down to, and we came down to the 0.5, slightly above it, found support, and then we came down, took out the 0.5, slightly above it, found support, and that was our bottom. So we got a 50% retracement from the $3.50 range back in the 1990s all the way back up to our all-time high here in 2011. So that was a 21-year bull market that we were in right here, or bull run. And then we came back down and retraced 50% of that move. So now we would expect to either take this out and get continuation to the upside, excuse me, or potentially come back down and retest the 618 or slightly above it as well. Do I think it's realistic that we're going to get back down to $10 on silver? I do not, based on fundamentals and technicals. Is it possible? Yes, based on markets and previous, price action. So we need to pay attention to that. And again, it's very easy for paper markets to get down to those levels on massive sell-offs or short positions. It's very unlikely that spot position would ever reach that $10 level. As anyone that was trying to buy silver spot back down here in March or anything like that, or calling around or trying to purchase it on the internet, the premiums at that time were like between $10 and $15 an ounce. So while paper trading was $11, $12 an ounce, actual silver was selling for $22, $25, $27 an ounce. So the premiums were at basically an all-time high for the majority of people's lifetimes. So paying attention to that, and looking at our fib extension targets and potential targets to the upside, we got back up to the 618. So our next target here is going to be to the 786 of the all-time high, which would be a bullish retracement of the bearish consolidation pattern. So from the all-time high to our low down here, a 78% retracement would put us at $36.62. So we are looking for $36 silver next, and then our target after that is going to be $42 silver, and then a retest of the all-time high just under $50. So 36, 42, and 50 are our next targets to the upside, and then target back to the downside would essentially be if we broke down from this pattern, any of these other Fibonacci's that we discussed based on like whichever relevant Fibonacci we're looking at. So there we have it, guys. Crypto Trend Trader. Oh, you know what? I wanted to take a quick look at Bitcoin dominance as well. You'll see that, like we discussed, the daily Bitcoin dominance has continued to the upside. We are now consolidating in this range above the 8. If we break back out from this area as well, we would expect a retest of the next relevant area, which, we had talked about this specific resistance area, which is exactly where we're at right now. If we can break through that, the next resistance or key area we'll pay attention to is close to like that 73% Bitcoin dominance. So it might not seem like much because we're at almost 71% Bitcoin dominance now, but another 2% in Bitcoin dominance is essentially 2% of a $731 billion market cap. So, obviously, what is that? Like 14 billion. So another $14 billion flowing into Bitcoin and out of altcoins is obviously very relevant. So, and then while we're looking at it, actually, we can look at the weekly. I do have the crypto total market cap, and exactly like we spoke about, we put in that previous high here in red. That was our all-time high from the 2017-2018 rally market top right there. Sold back off to the 200s, kept bouncing those, and then we came back up here, and as you can see, just like we discussed ahead of time, we've got back to the all-time high. We are consolidating in this range, and it still looks bullish to me. I don't see any reason why at this time we would not continue to see money flow into crypto, but is it possible that we would top out right here, sell back off, and then find support somewhere, whether it's going to be at our purple area at 534 billion. Seems unlikely now that we would have a $220 billion sell-off or, equivalence and loss of value. But, if we did get a massive sell-off or something like that, it's not unrealistic to think that we could come all the way back down and retest the support levels that were previous resistance, all the way as low as like that $320 billion range. Now, that would be a massive sell-off and essentially a topping pattern for this portion of the Elliott Wave macro or Bitcoin crypto rally. But it's always good to have these targets in mind ahead of time. And if we break out to the upside as well, that would be essentially the equivalence of a blue sky breakout on crypto total market cap. And we would start looking at our Fibonacci extensions and pay attention to our potential targets to the upside. So there you have it, guys, a crypto and silver market update for today. And if you have any recommendations, questions, or requests, feel free to leave those in the comments as well. Also, I'd appreciate just any comments, likes, and make sure you subscribe for daily market updates. Crypto Trend Trader, and I'm out of here. Oh, and remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Peace.